Now, retailers report lower sales numbers yet again. Just how bad were those numbers and how should you play it? For that, Vera Gibbons joins us here, and Adam Johnson is here as well. Vera, I want to start with you. These numbers, yeah, very bad, not so
bad.
good.
You know, this is actually the 10th straight month of declines that we've actually seen. You've got the job worries, you've got rising unemployment, higher gas prices, lousy weather, that had something to do with it, lack of new and exciting fashions. So just a lethal combination for summer staples. The perfect storm here. In fact, you're in difficult comparisons from the same period a year ago when consumers had that extra cash from the stimulus checks. And, no surprise, sharper than expected declines in any number of chains. One of the worst performers, Abercrombie, 32% drop in those same-store sales. Looking very quickly at the other segments here, department stores posting big declines as well, but beating estimates, something we can discuss a little later. Discounters struggling as well. Costco is 6% drop. Really the only bright spot here, Matt, the off-price retailers. Everyone's been trading down, so sales were actually up at places like TJX, which owns TJ Maxx, Ross Store, a small gain there. So no matter how you look at it, I mean, it's a very, very bad overall picture.
Let's go back to the chart that we had up of Abercrombie and American Eagle. I mean, these stores where the kids go, right?
Yes.
They're supposed to be the ones doing well, and they're getting hit the hardest.
One of the problems with Abercrombie has been their reluctance to actually mark down prices, but they're starting to do that now. And ironically, just a couple of days ago in the New York Star, I saw a very long line outside Abercrombie. So that number actually was very surprising to me today.
And then, obviously, we continue to see the same trend of the guys who are discounting doing a little bit better.
Doing a little bit better. Just, you know, small gain, eking out like 1–2% of those.
All right, so now we bring in Adam Johnson for How Do You Play This? You've been talking to your boys on the street all day.
Well, as a matter of fact, I just hung up with a guy who is short Abercrombie. He's also short American Eagle. John Catafumo at PM Primoris Opportunity Fund. And it's great. He said, there are no green shoots as far as I can see, certainly not in retail. It's one of the worst years ever, especially for the teen retailers. And it's, of course, what you're talking about. And, you know, one of the classic things that you always see in the summer is kids working, summer jobs. Well, they're not working this year. They don't have money.
And the weather was so bad, so they were staying in, like everybody else.
It actually was pretty amazing, because I always was wondering, where are these kids getting money, right? Why does the teen spending continue on as their parents are losing jobs, and apparently it's fallen off a cliff here?
Yeah, summer jobs. Now, interesting, as I call around the street and talk to different guys, there are a couple of things that sort of stick out. Number one, hedge funds have generally been short. They are staying short the names that really disappoint, and they are covering the ones that did okay, not quite as bad as everyone thought. So, you know, classic ANF down 32% on same-store sales. Yeah, and it sounds like guys are staying short ANF. But you look at a hot topic, the same-store sales down 8%. That sounds kind of grisly, but actually the expectation was down about 6.3, and the stock is kind of flattish today.
So it's all relative, basically.
So you are seeing that action, though, where guys are covering the names that were kind of in line, not as bad as they thought. You know, everyone's afraid of getting burned. That's one of the key comments.
Speaking of hot topic, I mean, you have that back-to-school bullet point up there. The kids have to buy clothes before they go back to school, right?
That's the catalyst for spending. So all eyes will be on the back-to-school numbers. In June, there was no catalyst for spending. Nothing.
No jobs, but when they go back to school, they have to get those new outfits. There's just
That's right, yeah. Ken Perkins of Retail Matrix, he says, back to school is the only catalyst that's out there. And he says, quote, it's not setting up well. That's the issue. And, you know, there's something else that's been going on. While we're talking about being short retail in general, well, there's a trade-down trade, and whether it's, you know, Howard Davidovich who talks about this, consumers trading down to cheaper names like
the dollar stores.
Yeah, the dollar stores. FDO, which was up 12% yesterday because they did better. TJ Maxx, you know, which is up today, up about $1. Their same-store sales were up 4%.
Yeah, well, they have their inventory under control, so they're actually able to bring more merchandise in, and it's pretty decent stuff.
Inventory is going to be actually a key thing to look at over the next couple of months, because as my afternoon partner Carol Masser points out, a lot of these stores are going to start having to get their inventory ready for Christmas. I know it's only July, but this is when they have to start thinking about that.
That's right. Now, I want to show you an unbelievable chart. It's 99-cent stores. The ticker is NDN. You want to talk about what's happened in these dollar stores. Look at that. That's where the guys are going. They're actually long these names, but as Gary Raymond of GR Advisors pointed out to me, he said, Adam, this is a very crowded trade. He's not alone. That's a recurring theme that I've heard around the street. Very crowded trades.
From Vera for weeks and weeks now. Adam, thank you so much for joining us. Vera, thank you.